Hey everybody, I'm Brian Rich from Catalyst Investors. Thanks for having me. We're based here in New York. We are growth phase investors. We consider ourselves to be under the VC ecosystem, so hence I'm on this panel. Maybe it makes sense for me to just go through definitionally what growth equity means, just for the audience. Would that be helpful? So to us, growth equity, as the name implies, you're investing in higher growth companies, which to us means typically, higher than 20% growth, but sometimes a lot higher than 20% growth. But they're companies that are fairly well established, where you know how big the market is, you have a general idea how fast the market's growing. And they tend to be industries and verticals that are in the VC ecosystem, and to no surprise, because those are the highest growing, fastest growing, companies and verticals, at least in the US economy, are typically the VC-backed ones. We are indifferent between minority or majority ownership. We look for returns not really as a function of debt. So we're either all equity or very modest users of debt in conjunction with our investment. Our investment will go in typically for primary capital for the company to use it for growth. And by the way, the companies can be cash flow negative or positive. And we're not necessarily indifferent about that, but we're happy for companies, particularly the faster growing ones, to be EBITDA negative. But we like to be the last round of capital before they get to cash flow positive in the base case, if that makes sense. And also, just thinking about the portfolio management of like our portfolio versus a VC portfolio, they're two totally different animals. So our portfolio will target a 10% loss ratio. And we'll target in terms of a reasonable case, looking to make kind of 2.5 to 3x gross on the investments. So if we do it well and we have 10 companies in our portfolio, some of them maybe will exceed that expectation. Maybe we'll have one or two that don't do quite as well, and maybe even have a little bit of loss. But we're not looking at all to have VC portfolios will typically have 30 to 50% loss ratios. So that's not stylistically what growth equity is about.